Hi guys, and welcome back to the Mindful Investing channel. Today I want to share a compelling investment opportunity with you, investing in shares of German sports car company Porsche at a discount. Whilst trading cheaper than its peer Ferrari on basically all metrics at a forward-looking PE of approximately 21, Porsche certainly does not scream cheap buy. So let's dive deeper and look at a way how we can gain exposure to Porsche at a far more compelling valuation. Following a failed attempt to take over its German competitor Volkswagen in 2008, Porsche was acquired with Volkswagen and operated as a subsidiary of Volkswagen until very recently, when Porsche was IPO'd by Volkswagen in 2022. During said IPO, Porsche Automobil Holding, a listed investment vehicle controlled by the Porsche and Piech families, acquired 25% plus 1 share of the non-listed common stock of Porsche. Why non-listed, I hear you say? Like many family-controlled companies in Germany, Porsche has two classes of stock. The aforementioned non-listed common stock and the following the IPO now listed preferred stock. One thing to keep in mind is that while they have the same name, German common and preferred stock differ to American common and preferred stock. To keep it simple, just remember that while German common stock bears voting rights, German preferred stock benefits from higher dividends. Back to Porsche Automobil Holding. This will be a way to gain exposure to Porsche's shares at a discount. As I mentioned in the beginning, Porsche Automobil Holding is the listed investment vehicle of the Porsche and Piech families. Let's have a look at their portfolio. Basically, they have two core holdings, Porsche and Volkswagen. They also have other investments, but let's just ignore them for now to keep it simple. Porsche Automobil Holding stakes in Porsche and Volkswagen are currently valued at approximately 38 billion euros. Deducting net debt of around 7 billion euros, we get a net asset value of right around 31 billion euros, or 102 euros per share. When comparing net asset value to the current share price of 53 euros, we see that Porsche Automobil Holding is trading at a steep discount. But that's not all. Volkswagen, one of the core investments of Porsche Automobil Holding and the company that IPO'd Porsche in 2022, still owns a significant stake in Porsche. As of 31st of March, their stake is currently valued at around 80.5 billion euros, or approximately 160 euros per Volkswagen share. Like Porsche, Volkswagen also has two classes of stock. So if we compare the 160 euro Porsche stake per Volkswagen share to the weighted average share price of Volkswagen of approximately 145 euros, we see that Porsche stake alone is worth more than Volkswagen current share price. Which is odd, given that Volkswagen generated around 23 billion euros of EBIT in 2022 and owns several major brands like Lamborghini, Audi, Bentley, which could also be spun off in the future. So let's try to quickly value Volkswagen and see what happens to the net asset value of Porsche Automobil Holding. If we assume an EV/EBIT multiple of 10 times based on 2022 EBIT of 23 billion euros, we get a value of Volkswagen's operating business of around 231 billion euros. If we deduct net debt of approximately 167 billion euros, we get an equity value of 64 billion euros, or a share price of 128 euros per share. If we further add back the value of Volkswagen's Porsche stake of around 161 euros, we get a realistic share price of approximately 288 euros per Volkswagen share. So Volkswagen currently looks like a bargain. Now let's calculate net asset value for Porsche Automobil Holding, again based on the realistic share price we just calculated. When we do so, we get net asset value per Porsche Automobil Holding share of around 169 euros, which is almost a 70% discount to the current share price. To recap, Porsche Automobil Holding could be an opportunity to gain exposure to Porsche whilst benefiting from a strongly advantageous risk-reward ratio. If you enjoyed this short dive into Porsche, please leave a like and feel free to ask any of your questions in the comments. Always remember to do your own due diligence, your own research, and to never simply trust a guy on the internet telling you about some compelling investment opportunity. See you next time.